As of the close on Friday, August 3rd, the market still had a bullish slant from a technical perspective, primarily based on the hope that Europe is getting ready to crank up their printing presses in a Fed-like manner. The vast majority of the technical evidence is bullish. There's a however coming. A full commitment to this rally, even from a technical perspective, is not in place yet. Last week, we showed some RSI thresholds that had not been exceeded yet. They still haven't been exceeded. That's concerning. Really, what it comes down to, if Europe can come up with some type of plan where between the bailout fund and the ECB that they'll step in and potentially cap yields on Italian and Spanish bonds, the commitment will probably follow. This is a weekly chart of the Dow Jones Industrial Average, MACD, bullish cross into the end of the week. Here's a bullish cross here, gains followed. Bullish cross here, gains followed in stocks. We're also now above the 22-week moving average in terms of price. We'd like to see this 22-week moving average, the slope of it, turn up. Today's video comes from the Westin at Crown Center in Kansas City. Had a meeting here this morning. You may notice a little drop off in production quality, but the material should still be helpful to us. Similar concept here. We're looking at a weekly chart of the S&P 500 index. In this case, we are above the 22-week. The good news for the bulls is the slope of this line is trying to turn up. The blue line, similar to this period here, gains followed. This period here, gains followed. If you'd like to watch this video in full screen mode, you can click in the lower right-hand corner of your video player. This is a weekly chart of the VIX, of the Volatility Index. This is the VIX here, this black line. The point we want to make is relative to Williams percent R. You can see here Williams percent R went from above negative 20 here down into quote-unquote oversold level, meaning the VIX has made a relatively significant move in terms of momentum on a weekly chart. The last time that happened when we moved from this area on Williams percent R to this area, so from here to here, if I move up here, this is the S&P 500 index here, weekly stocks did well. Similar situation here. We're above it, move down into this area here. If we come up, the S&P 500 did well. This is an update to the chart of the S&P 500 or SPY, the ETF, relative to the aggregate bond market ETF, so think of it as risk on relative to risk off. If you're new to the videos, quickly, what we're looking at here is moving average crossovers. This is a bullish moving average crossover here. Stocks did well. This is a bullish moving average crossover here. Stocks did well. Bullish cross, stocks did well. We have a similar cross here that is now held for several weeks, which leans bullish as long as it holds. Later in this video, we'll show some positive developments for gold. This is a relative disappointing development for gold. This is gold, the physical gold, relative to foreign stocks or the EFA foreign ETF. You can see for the most part, gold has been weak relative to foreign stocks since the market bottomed in early June. We see weakness again. All this tells us is, for now, we'd probably rather own foreign stocks over gold. Now, one positive development here is we do have a trend break here. This, as we speak now, is a higher low relative to this. If this can hold and go on to make a higher high, that would be a positive flip for gold relative to foreign stocks. We've revisited this chart several times. This is a weekly chart of EFA. 2 quick points. We've been concerned about this blue line potentially being resistance. We've now closed above it 2 weeks in a row, and we made a higher high this week. All things being equal, that's a positive. Weekly RSI down here closed above 50. This is a weekly chart of the New York Stock Exchange Composite Index. We showed this last week. We said we were concerned about this trend line acting as resistance. You can see we just barely closed above the trend line that we drew previously. Looks like a breakout, but you can get head fakes here. It's possible we need to come back down and test this area, but just in terms of price, closing above the trend line, that's a good thing. This is another chart we showed last week with this trend line here, similar situation. All things being equal, the fact that we closed above it last week is a positive. The longer we stay above this downward sloping trend line, the better. To improve the clarity of the charts, use this icon in the lower right-hand corner of your video player. This is another chart we've shown several times. This is the equal weight S&P 500 ETF. It's a weekly chart. Originally, we said markets tend to be stronger when you're above these two blue lines. We are above them. We'd also like to be above the 50-week moving average. Notice the 50-week moving average is turning up in a bullish manner. 2 weeks in a row now we've closed above this downward sloping blue trend line. As it sits now, this chart also leans bullish. This is a chart we wrote about in short takes this week if you want to find that post on our blog. So weekly chart of the S&P 500. This is a trend line dating back to late 2007. You can see it act as resistance bullish breakout recently in 2012. Looks like now we're coming back. What once was resistance is now support. That's a good sign that we held here in late May, early June. These are parallel trend lines. This line, and this line. You can see they've acted as short-term resistance, support, etc. When you look at them, the point of it is we may run into resistance if we're able to get that high somewhere between, let's say, 1435-ish, 1440-ish, 1450-ish if we were to fill this white space here. This is a daily chart of the S&P 500. Ignore all of this. We've reviewed it before. What caught my eye here was look at Williams percent R on a daily S&P 500 chart. This is bullish. It just is. Notice Williams percent R is not coming down and moving below negative 80 into quote-unquote oversold territory. That's an indication of strength, and we are able to move decisively above negative 20. If you gave this to me on a test and said, is this bullish or bearish, regardless of what's happening with the economy or in Europe, that looks bullish. There's always something to be nervous about. This week, daily chart S&P 500, this trend line here, we closed right on it. Absolutely, this could act as resistance. The only good news is there is a small, subtle difference here. Notice here we did not move above it intraday. Here we did. And usually when you see a break or a difference like that, we may not break it now, but the fact that we went above it intraday increases the probability of eventually moving above this trend line on a daily chart of the S&P 500 index. We've looked at this several times. This is the monthly chart of the S&P 500 with the rate of change indicator. When rate of change goes above the center line here, this is the stock market, good things tend to happen. Rate of change goes above the center line here, the stock market, good things tend to happen. We're well above the zero line now on rate of change. So all things being equal, this is bullish. This is a monthly chart of the S&P 500 we've been using for potential support and resistance. We hypothesized previously that a monthly close above 1354 might open the door to 1440. Last month, we did close above 1354, and we remain above it, which does leave the door open to 1440, which is this level here. Just updating this weekly chart of the S&P 500, we've now closed above this green line here for 2 weeks. We've got this white space here up towards 1440. This is a daily chart of VEU, the All World Index, sans the United States, that we've been using for maybe several months now. This is a downward sloping bearish trend line. What once was resistance may now act as support. So the fact that we held here after we broke out tends to confirm this bullish breakout or increase the probability that this is a legitimate breakout above this line here. I could draw a trend line here, so there is some potential resistance in this area here, but there should be some white space in this chart, which says the path of least resistance is most likely up in the short term. Notice the 50-day moving average, the red line is turning up in a bullish manner. The 20-day also has a slightly positive slope here. We closed above both the 100-day and the 200-day last week. All things being equal, that too is bullish. This is a daily chart of VEU that we've shown in the past. 2 points here. These trend lines, the blue one here and the pink one here. This is the first time we've decisively closed above them on a daily chart, which is what we did on Friday. This is an upward sloping RSI trend channel. There's a good chance that this RSI will try to move towards this area again, which also says in the short run there may be more upside in VEU daily. This is a weekly version of VEU that we've been looking at. We've now closed above this downward sloping trend line and this downward sloping trend line. We're above the 22-week moving average. Last time we crossed above the 22-week with a bullish MACD cross was here. Gains followed in VEU. Last week, I believe, we had a bullish MACD cross in VEU. At the end of this week, we also had black above red, which is similar to this cross here or here. You can see that you do get whipsawed sometimes, but even this cross here was indicative of a bottoming process. This is a weekly chart of EFA, foreign stock ETF. You can see this downward sloping weekly trend line. We've now closed above it. We've also closed above these two potential hurdles here, these blue lines. We have a bullish MACD cross on a weekly chart. We have MACD histogram above the center line. One potentially bearish thing on this chart, this could be a shoulder, this could be a head, and this could be the right shoulder forming. Way too early, but it could be a head and shoulders if we reversed and broke below this blue line here. Speaking of head and shoulders patterns, now we're looking at a daily chart of VEU. This was a bullish head and shoulders pattern that we watched before. We said the potential target was here. We've met that target. Here's another potential bullish head and shoulders pattern forming. It's not the cleanest thing in the world, but you could argue that this is a left shoulder, this is the head, and this is the right shoulder. If that is the case, and this is your neckline up in this area here, we appear to have broken it. We closed above this area here on Friday. If we had a similar target, it would be this orange line here that literally goes off the chart. This is physical silver relative to foreign stocks. This is showing weakness in silver relative to the EFA ETF. If you're a risk bull or a stock market bull, you'd really like to see silver pick up the pace a little bit here. They're trying to reinflate. This doesn't look like a successful reinflation chart just yet. We'd love to see silver take off in the next few weeks. If you own stocks, that would be good for stocks to see silver move. In this video, we show a lot of bullish developments. This is concerning. It was concerning last week, and it's still concerning. This is a daily chart of the S&P 500 index. This is the relative strength index here. We still have not cleared this blue line here. I'd like to see RSI pop in to really, I'd like to see it at 65 or 66 to make me feel better about a more sustainable advance. This is a slight divergence. You're making higher highs here, and RSI is not. We want to see this get erased on numerous charts. We've been in this market for some time. We started buying down here. We still have a decent amount of cash around, and to redeploy that, we need these RSIs to break above this and move closer to 65 or 66. This is a daily chart of EWG, the German stock market. It's highly correlated to the DAX. The DAX moves a little bit differently. This is the German stock market nonetheless. Mixed bag here. This may be a bullish head and shoulders pattern. Can't see. Price broke above this blue line here. Price is right here is where it stopped in this area here. Here's a left shoulder potentially, a larger head, and a smaller right shoulder. If this is a head and shoulders pattern, with this being the neckline, when you see the right shoulder smaller than the left shoulder, that tends to be bullish. If this target were hit, we'd be moving on EWG up to this area here, somewhere approaching $22 a share. It closed Friday, August 3rd at 2069. The negative part of this chart is RSI. Still have not broken above this in a very similar manner to the previous chart we looked at of the S&P 500. It closed at 60 and change. We'd like to see that at 65 or 66 soon. This is a chart we've shown in the past. It looks busy. It's easy to understand the concepts here. This is FXI, the Chinese stock market ETF. This is a downward sloping trend line that acted as resistance here. This is a bullish breakout, which would be step 1 for a potential trend change. Step 2 is that you want to make a higher low. This low here is higher than this low here. That's step 2. Step 3 is you have to exceed this high. And you'll note a few weeks ago we wrote new trend here on this chart if this line was broken. Well, last week we indeed did break the line. Now we do have resistance potentially here, so it wouldn't be surprising to see a bounce back, but that's a good sign, and this is now an upward sloping trend channel. Still have gold on our radar. It's making progress. Still don't think at this point it's the best place to be. That may change if they continue to lean towards printing money in Europe. GLD daily. Notice GLD has not made a low since mid-May. That's a good sign. It's a higher low. This is acting as support. We made a higher high here relative to this high, and we're making a series of higher lows. So this chart is leaning bullish. We could easily see GLD move to the top of this trend channel here, which would be about 160. We just like to see it pick up relative to other assets, and like silver, if you own stocks or you're bullish or you own risk assets, they're trying to re-inflate the financial system. We want to see GLD start to not only move, I'd like to see it lead. In terms of the central bankers possibly being successful at re-inflating the financial system, this is a basic materials IYM ETF. This is a good sign. It broke through this downward sloping trend line. That's a good sign. We wanted to see if we could break this RSI line. We did poke right above it here, take a little peek above it. As long as that holds, that's a good sign. Like to see RSI move here. Much like GLD, you can see IYM filling this white space potentially and moving from 64 and change above 66 is a possibility. This is a breakout here. Sometimes you get head fakes, so we'll just have to see if this holds. I think we may have mentioned this last week. There is one area where silver is showing some leadership relative to stock markets. Silver has broken above resistance on its daily RSI right here. That's a good sign for silver. Another good sign is this is a series of higher lows. This is higher relative to that. We also broke out above here what once was resistance here, and here is now acting as support roughly in here, which makes this breakout a higher probability event in terms of potentially holding. So this looks good too. This is not bad here. Wouldn't be surprised if they start talking about buying Italian and Spanish bonds in Europe, that silver would start to move up into this area here. That's what I'd like to see. Now we're looking at a daily chart of Treasury, long-term Treasury ETF TLT divided by the S&P 500 SPX. So think of this as the ratio of risk off to risk on. Lower high, looks like we're forming a downtrend here, which is good for risk, negative for Treasuries. Another thing to note, these thin lines here are moving averages. Here we get a breakout from a tight moving average cluster in early May, and notice the ratio advances in a bullish manner. You can make an argument that we just did something similar, or the mirror image of it here. This is a relatively tight cluster. It's not as clean as this one here, but we are below it now, and it's what could potentially act as resistance in this area here. So this leans bullish for the stock market and bearish for Treasuries. Just want to make a note that on the daily chart of VTI, we also have that problem with RSI. You have a breakout here. It's a higher high, But RSI has not made a higher high here, and in fact, it didn't even hit 60 on Friday. This is not a disaster. It's just something that needs to be cleared before I'll feel better about advancing markets. As long as this holds, I would err on the side of holding on to some of my cash. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.